Thinking of starting a business in the UK? You've probably come across the term private limited company or limited by shares. In this video, we're going to break down what it means, how it works, and the pros and cons to help you decide if it's right for you. Well, a private limited company is a type of business structure in which the company is legally separate from its owners. This means that if your business gets into debt or faces legal issues, your personal assets are protected. That's what's called limited liability. What makes a company private is that its shares are not available to the public. They're owned by founders, directors, or private investors. A few key features define a private limited company, and they set it apart from other business types in the UK. For instance, you don't need a company secretary. Unlike a public limited company, a PLC, you're not required to appoint a company secretary. In an LTD, the director is responsible for ensuring the company stays compliant with UK regulations. You can register as a sole director and sole shareholder. You don't need multiple people to start a company. A single individual can register a private limited company and act as both the sole director and the only shareholder. You must provide a UK registered office address. Every private limited company must have a registered office address located in the UK. This isn't just a formality, it determines your company's legal jurisdiction and where official correspondence will be sent. You need to identify your person with significant control, your PSC. If someone holds more than 25% of shares or voting rights, or otherwise exercises significant influence over the company, they must be listed as a person with significant control. If no one meets your threshold, no PSC needs to be recorded. Directors can have a correspondence address from anywhere in the world. Directors must provide a correspondence address where they can receive legal and compliance-related documents. This address can be based outside of the UK. Over 97% of all registered corporate bodies in the UK are private limited companies, and it's easy to see why. This structure is the most preferred for startups and growing businesses. Offers protection, flexibility, and credibility. Limited liability. A private limited company is legally separate from its founders. That means your personal assets, like your home, your savings, or your car, are protected if the business runs into debt or legal trouble. And when things go well, this structure gives you room to build something much bigger than yourself. Full control. You can register a limited company entirely on your own. You don't need a co-founder or a business partner. This is especially helpful for sole traders who want to transition into a more structured and secure business model, whilst maintaining full control. Separate legal identity. As a separate legal entity, your company can enter contracts, open a business bank account, bring in shareholders, and raise funds more easily. This makes it easier to grow, scale, and secure investment without tying it all directly to you as an individual. Tax efficiency. Private limited companies offer more flexibility in how you take money out of the business. Many directors pay themselves a mix of salary and dividends, which can help reduce the overall tax liability compared to being taxed entirely as an income. Branding and name protection. When you register a limited company, your business name becomes legally protected. This prevents others from using the same or confusingly similar name, giving your brand more authority and, of course, credibility, especially when dealing with clients, suppliers, or investors. While private limited companies offer many benefits, it's important to be aware of the responsibilities that come with this structure. Now, these aren't necessarily deal breakers, but you should be prepared for the additional administration, costs, and compliance requirements, higher setup costs than sole traders. Setting up as a limited company involves formal registration with Companies House, which comes with a fee. You may also need to pay for services like registered office address, a director's service address, or professional help with formation. In contrast, sole traders only need to notify HMRC, that's Her Majesty's Revenue and Customs, and can begin trading immediately at little or no cost. Public disclosure of company information. When you register a private limited company, certain details become part of the public record. This includes your registered office address, company accounts, and the names of directors and shareholders. If you value your privacy, this level of transparency might feel intrusive. Although services like director address protection can help shield your personal information. Ongoing compliance and admin responsibilities. Private limited companies must meet more ongoing legal and financial obligations than sole traders. These include filing annual accounts and confirmation statements with Companies House, submitting corporation tax returns to Her Majesty's Revenue and Customs, keeping up to date and accurate financial records, informing Companies House of any changes to the directors, shareholders or your company's registered address, and paying corporation tax on company profits and managing payroll if you hire staff. Failure to meet these requirements can result in fines, penalties or even being struck off the register. That said, these responsibilities are manageable, especially with the right support or accounting tools. So there you have it. A private limited company offers flexibility, protection and credibility. If you're serious about building a business, it's one of the smartest ways to get started. Need help registering your LTD? Hit the link in the description to check your company name and choose a package that suits your needs. And don't forget to like, comment and subscribe for more business tips from your company formations. Thanks for watching.